Happy Friday, traders. It is 8:02 a.m. on Friday, non-farm payroll unemployment day, the 3rd of September, 2021. Thanks for joining me today. A quick mic check, please. Just let me know where I stand in terms of audio here. Fortunately, I have to do that because Windows, no matter what you do, it does take over and control your microphone settings. It's very irritating. Anyway, let's jump right in there and get into the day. So far, really a mixed market. The market is responding to the non-farm payroll report, which came out about a half hour ago. The non-farm payroll report and unemployment, the payrolls were expected at 700 plus 750,000 jobs, came in at 235. The prior was 1.053 million, a massive drop in August. And the reaction was a quick spike to new all-time highs in the S&P. We saw the bonds and the notes move on this, of course, but we did push the all-time high in the S&P to 45, 49.50 in Globex. The unemployment rate came in at 5.2%. Consensus was 5.2%, and the forecast was 5.3%. So we spiked up. We'll go over the details of that, but we spiked up and we immediately fell. We see funds moving into gold, silver, copper, crude, basically commodities, and out of treasuries. The indices were actually flat to slightly down. And they are pushing a little bit higher, although the Euro Stoxx is not recovering. So the overall market posture as we stand was mixed before the number came out, and it's still mixed after the number has come out. No major earnings today. The key event, of course, today is the unemployment's large miss. Expecting some movement on the open. I expect that adjustments will be made. The trick is liquidity flows or fund flows. We didn't see very much of that in the last 2 days. So we had a big move on Monday. We had sideways day on Tuesday. We had somewhat of a sideways day on Wednesday, and then yesterday we did some selling in the S&Ps, and I'm referring to the S&Ps because that's the most popular market, and also because it represents a large portion of the economy of GDP. And so even though it's a new month, we have not seen fund flows yet, and we may see that today now that we know where the market stands in terms of unemployment. The catch here is that Monday is a holiday. Monday is Labor Day. It is a holiday. Just as a note, I will not be on Monday. There is no Trader Bite. We'll be back in business on Tuesday, and I'll be shouting at you from Canada while I visit family from up there. So hopefully everything works up there. But Canada finally opened its borders to U.S. Residents, and so I'm going to take a chance to jump up there before they shut it all down because of the Delta variant and this next new variant. So that's where we stand. What's left for today? The market services PMI final expected at 9:45. That's 15 minutes after the open. A composite comes with that, and an ISM non-manufacturing at 10. Hard to say at this point if this is one of those NFP days where we have movement immediately on the open and for an hour, and then it just goes dead. Everybody takes their positions into the weekend, shut down, and just go and enjoy a 4-day weekend. Not sure if that's going to happen or if we see volatility and movement positioning throughout the day. In either case, we are looking at a market that a market that is likely to position itself on the close. So I would pay attention to the close today, the last half hour trading at least, the imbalances and so forth. And I will not be here for that, but just to pay attention to how the market positions itself on the close. The S&P has a multi-distribution profile, really a P-ish shaped profile, 220,000 contracts, 63%. The inventory 63% long because settlement was well below where the bulk of the trading has taken place. The point of control is 45.43. Yesterday's settlement was down at 45.35 and a quarter. This is why inventory is shown long. So these are key areas above. We do have the point of control and VWAP within range. The volume is elevated, and I expect a pretty active open. So this is one of those opens you'd want to pay attention to this morning. So that's where we stand there. A quick review of yesterday's expectations. Yesterday, expected the market to pull back a little bit, push the high at 35.50 in the overnight session, 35 in the prior session. Actually, the market opened right on top of the overnight high, and then I expected it to fail to continue. We were seeing signs yesterday that the market is, although I did say it'll likely make a higher high, higher low, no matter what scenario, I expect it to falter to push higher. The secondary scenario is to push through the 45, and these tick marks here represent the next resistance. The next resistance up is the stock zone at the measured move at 44.50. The one above that at 47.50, and the expectation is we would tag those and come right back in and fall through down into the 25. If you recall, the 28 to 25 has been in play for several days. Expected it to just sit sideways there. Here's what actually happened in our review segment. This is the action from yesterday. We open right at the overnight high. We test up to 44. Remember, the first resistance we talked about on the high yesterday was 44.50. That was a measured move target and a stock zone. We missed that by 2 ticks. We hit the 44 and pulled right back to the open, and then we managed to drop to 22.75 right into the prior day's point of control, right into that 25 area, and we got stuck in this 25 to 28 zone, which comes to us from here and here. This is where essentially the market, although it's been slow, has had really good structure. This is almost this is a great market for screenshots when explaining the auction market process or principles, because it is just doing exactly what we would expect under auction market principles. So we tested and held the 34.50. Remember the double top at 34.50. We poked through on Wednesday by 2 ticks and dropped right off. Saw that as bearish. We opened in a gap, and we expected a bearish move down or congestion or being stuck, given that non-farm payrolls are today. That's the narrative and the context we were trading off of yesterday. That was the plan. And we managed to open above, pull back into that 34.50 area, and bounce right back up before breaking through. And then we come back through and test it from below. Very clean. I wish I could draw a straight line on the software here. If I could hold like the shift key and draw a straight line, that would be great. But you could see the 34.50 double top starting to falter. There it is. So you could see right here is a double TPO high, tested and failure. This is a failed auction here. This is an example of what's called a failed auction. The market pushes, pokes through, checks to see if there's any interest to continue. If it sees no interest to continue, it falls right back off. It's called a failed auction. It's an auction that tried to go higher and could not get the support, and it comes back and it's bearish. So we look for a continuation sell, which it provided right here on Wednesday. That was a nice little setup there against the 28. The 28, where does that come from? Right here, 28, clear structure. 28 is the bottom of the zipper of the rally day on Monday. 28 was the high of Tuesday. We kind of bounce up into 29.30 on Wednesday, and it plays down here. It plays down here in what was expected to be a continuation move down, which did not happen. Instead, it failed, but it came right back. So you can see there's several zones there in this area that are very well defined and continuously tested. These zones are something pretty decent to lean on because there's defined risks, right? There are boxes that we can lean on for support, so that we're not getting into a position where we're getting long and it just slashes right through, or we're picking bottoms in the middle of a vacuum. We are looking for turns against support and resistance. So yesterday, this sell-off here represents scenario 2, pretty much on point with the high at 44 against 44.50, and then we took out 25.50 by a few points, a couple points, and then consolidated and pushed back up. So we ended up with a higher point of control. And we ended up with higher lows. Market trend reestablished in the day time frame to the higher side. We expect to push, as I talked about 2 days ago, we expect to push eventually to 45.50 as the mid-century figure, a major strike in this area. And so this is what we're walking towards. A couple things to keep in mind. Short week next week. Next week triggers off the beginning of the fall season. Next week is a shortened week. But the week after that, the week of the 13th, becomes the first true fall trading week, and that is expiration week. The 17th of September is going to be expiration. The 9th, next week, Thursday, is official rollover. So we're going into rollover here, folks. So a lot of things are going to be disturbed by this process that occurs 4 times a year in this product. And that's where we're going. So anyway, I'm going way over my time. Here's what has happened since. So we closed relatively decent here. We had some pretty good retests and higher lows into the close. We settle at that 35 quarter that I mentioned earlier, and then immediately buyers come in and take it right back up and push the all-time high we put in the day session at 35.44 and hold sideways. We expect the market to hold sideways into non-farm payrolls. Non-farm payrolls come in. The SOC is around 43, I believe, or 42.50. Immediately spikes higher, spikes lower, and then is starting to walk itself down. And what it looks like is the market is happy to see non-farm payrolls miss, because that helps delay the taper, more Fed food, more chum in the water, so to speak. 1 second. More chum in the water, so to speak, for the fat fish to eat. But at the same time, and we did beat on the employment rate itself. We came in at 5.2 versus 5.3. So the market had a bipolar reaction to this and is now moving in the direction of what you would expect to happen, which is, hey, there's a big miss in the number of jobs created. There may be a slowdown occurring here. And it's walking away from the overnight point of control. It's tangled in the full session VWAP, full session mid area, and it's creating a situation where we're opening against yesterday's point of control, And there's so much going on here that it's likely to be noisy on the open. So we expect the market to to push around or squeeze around on the open today. We have a clear resistance line at 44.45, and then we have the point of control just underneath there at 43. So this area here from yesterday's IB high at 44, the top that was put in overnight ahead of the non-farm payrolls, that area is going to be the area I'm going to be paying attention to the long side. Expecting failure there if it does not take that out. I don't know that there's a sense in pulling up the composite chart because we're really not doing anything. We're not moving off of highs. We just keep pushing highs and pushing highs and pushing highs, and you can see that it's doing a good job holding prior lows. So the trend is higher and things are kind of holding steady. So there's not much to talk about there. Let's take a look at the action in the pre-market on Edge Pro X here. You could see that. Let me scroll back. This is, let's detach. This is non-farm payrolls. You could see how it played out here. A big spike, massive spike higher, and then sellers just came right back to the SOC right there. Continuation. So I'd expect this is the expected move on scalps. The SOC pulls back to the SOC, the scene of the crime, comes back again, retests the SOC, tries higher, and is unable, and is now releasing to the downside. The buyers had a really hard time maintaining these higher prices, the ones that we spiked into, and we are trying to climb, but you could see that we are wrapped around the full session VWAP, full session mid, and are holding sideways here with a book that's pretty loaded. You could see that there's an algo that's in here and is very busy. This is kind of an annoying algo that's been here for a while. Let me reset to tie the DOM with the chart. This algo's kind of been here a while, and it's continuously just quoting above and below the markets, creating a lot of noise. Looking at the active chart, pay attention to these big lot bubbles. Let me increase the contrast on those. These big lot bubbles, you can see as the market is falling, you're seeing some lifting, some pretty good lifting here, right? And as the market pushes up into the full session VWAP, you see some lifting into that VWAP, and then they're unable to push through, creating a scalp opportunity short to the other side, back into 45.30 again, 45.30 being a key level from yesterday and the day before. So this to me is telling me that they're facilitating trades to the short side better than to the buy side. But look at the delta. The delta is making higher lows. As it makes lower lows, the delta is making higher lows and is pushing higher. So as it's coming down, there's also a force that is lifting the market as it falls. So sounds like I'm speaking from both sides, but what I'm saying is this is what leads into the potential that there's likely to be a two-way battle on the open, and it's likely to be choppy. So caution on the open. That's the point of telling you this, okay? There's some clear areas in yesterday's profile to play with. We are down here right now, so this is part of why we're down here. This is part of why I'm expecting a battle in this 35 area. I'm expecting a battle at 44, 45. So I'm looking for resistance as it pushes up, despite the push into despite the push of the delta higher. I'm expecting it to have a problem pushing into higher prices on the open, and that's one of the key things that drives today's plan. So let's take a look at what's expected for today. Stock zones on. master levels on. Okay, here we go. So what are we looking at for today? This is too far. We've moved it too far to the left. We need to see some of the structure behind. Okay, so what are we expecting for today? The prime scenario for today, it's really squeezing down squeezing down into yesterday's lows, which were higher than the overnight low. You can see there's some structure beneath us. I'm expecting this to open responsive. I'm expecting this to push back into settlement, which is up here. Expecting it to push back into settlement and make an attempt to take out this structure. Okay, to come into this noisy structure in the 44 zone. I'm expecting it to fail to push there. I'm expecting it to come off and potentially even extend lower. Remember, we're going into a holiday, non-farm payroll. Most of the action is likely to be in the early session, so don't commit too much and don't fade the initial move. That's the primary scenario. Secondary scenario is an open auction that moves a little bit higher, gathers some fuel, and then starts to take out yesterday's low. Taking out yesterday's low ends the one-time framing higher and triggers off a push into the MC point of control in the region at 45.20 for chop and a bounce, and then looking for it to start working itself down into the 45.05, which was last week's settle before the bounce. So we come back into last week's range. We are opening in range below value of yesterday, in range below a value, so I'm expecting it to be responsive first off. It appears weak to me, but we'll see. And what's going to govern this is how they treat this 40 to 44, 45 area. This area here is important. So let's put a marker on there, 40 to 45, a 5-point range. If it's not able to get in there and hold this area, then shorts only for me. Good luck. I'll catch you on Tuesday. Remember, Monday's a holiday. Good luck, and mind your risk today as we go into the weekend. Take care.